Well, it doesn't get much better than this. You can't complain. Heaps of opportunity, several days now to keep buying stocks around the ASX SP 4,700 level. You know, I haven't changed my tune. It's doing a lot of churning here, sure. There's a lot of pessimism about, sure, but the market is holding here. We still can't rule out another slight slip lower, but continue to see this as, you know, sort of the end of the hangover, if you like, of the pessimism of last year. Overnight in the US, saw the Dow Jones, the S&P down. The Dow Jones was down about 0.3%. The S&P was only down 0.1%. And all of the sell-off occurred in the first hour of trading, and the market spent the entire rest of the day strengthening. The sell-off was all again about the hangover fears from last year, sovereign debt in Europe. Spain, Portugal, Italy are due to raise about $43 billion this week in issuance and issues, and they, you know, that's just normal business really. But again, it's given some people, particularly in America, the opportunity to get all nervous and worried about Europe and sovereign debt. On that note, you know, the surprises are more likely to be to the upside than to the downside, more positive than negative. We've seen with Greece, they've just issued their accountability for the last year. They've actually cut their budget deficit by a whopping 37%, which is ahead of target. Revenue was up 7% in Greece over 2010. So they're very likely, I think it's January 20th, they come out with how they've done in terms of the deficit as a percentage of GDP, and they're probably going to achieve their 9.4% target. So, you know, the worst case of Europe is down to a 9.4% of GDP deficit. Again, United States, lift your game, see if you can do as well as Europe. So all this warmongering or fearmongering about Europe, you know, I said warmongering because the people were talking about the disintegration of Europe at some stage, but all this fear-mongering about Europe is wildly misplaced, and it just gives the rest of us an opportunity to buy. Yesterday I highlighted oil and the Australian dollar. I'll highlight them again today. They both look very strong. I might even throw sterling into that mix. Got to remember this whole US dollar bounce phase that we've seen based on the idea that the United States, US dollar will benefit from a strong US economic recovery, I think is misguided. I'm alone in that view, but I do think it's misguided for the following reason. The US economic strength, particularly corporate earnings and strong equity markets, is largely a function of a weak US dollar. The administration itself wants a weak US dollar. They maintain a strong dollar policy merely so that the US dollar decline is orderly and doesn't become a fast market. So everyone in the US wants the US dollar to weaken. Everyone who comes out and says publicly they want a strong dollar and it's good for the world, that's just to keep the market liquid. So this US dollar bounce isn't going to last that long. It seems to be petering out about now. The Australian dollar story still very powerfully about Asia. In the last couple of days, we've heard that Shanghai has now surpassed Singapore as the world's largest, busiest shipping port. So that's just a sign, another little anecdote to the whole story that China is not a bubble. China's just getting started, and we're going to see a lot more demand out of China and, in fact, all of Asia. At Hurston Economics, I myself was one of the first in the world to sort of put forward the idea of intra-regional trade about 10 years ago. Intra-regional trade is about the countries of Asia dealing more with each other and less with the US. It's about the countries of Latin America doing the same. And that's what global growth is about. It's about the intra-regional trade of these not emerging economies, but these newly emerged economies. And that's going to drive global growth to about 5.4% this year, we think, at Hurston. So we're looking for a very strong demand year for our commodities. At these levels, the Australian dollar is a snip. You know, you've got to consider that the US dollar is at the top of its range for the next 20 years. The Australian dollar is at the bottom of its range for the next 20 years. I mean, people who talk about the Australian dollar being at the top of its range of its last 20 or 30 years, what nonsense. We're not interested in the last 20 or 30 years. We're interested in the future. In the future, the Aussie dollar here, bottom of the range, next 20 years. Great buy. Probably a similar story for oil. Even gold's bounced back. I like the price action in gold over the last 24 hours. That's looking really good as well. So when you come down to individual stocks in Australia, still like oil companies, still like gold miners. The gold miners had, you know, a collapsing gold price priced in, I think, and that's not going to happen. So I think gold stocks can really consolidate here and move higher. The The Australian dollar is going to be high, as I said, commodity story. Reserve Bank's on hold for a long time. Great tragedy in Queensland just deepened yesterday. Not good at all for those people, but longer term the economy will be okay in Queensland, and so will the Australian economy, as long as the Reserve Bank stays out of the game. I mean, basically we'd all be better off if we didn't have the Reserve Bank at all. But that's another story for another day. Just on the opening today, of course, there's going to be a small markdown, but just remember that in the US, the market spent most of the day recovering and strengthening right through to the close. Have a great day.